Alright, what is going on YouTube? This is now my second time recording this video, as I just ran into some technical difficulties, so that kind of sucks. But, and to add to that, this video is a little bit late. I'm recording this on Monday, May 17th, a little later than what I wanted, a little later than when I wanted to have this recorded, but I was busy this past weekend, and this was the soonest I could possibly have recorded this. Before I get into the trades, there's just a couple things I want to talk about as far as my mindset and approach to the markets go. As of late, I'm in this kind of awkward stage, I feel like, of my development in learning the OTC markets as well as the listed markets, just the overall stock market momentum and price action reading in general. I'm in this awkward stage right now where I seem to be all right with finding the best stocks to play that are in play in the moment and provide the best risk to reward situations and are liquid, check all the boxes. My problem is just, like I've mentioned in my previous two weekly recaps, it's just my hesitation and lack of conviction, really. And, I'm starting to get a little bit better at it, but I think it'll just come with time. But the reason I wanted to bring this up in the beginning of this video is that this week it probably happened more times than it's ever happened to me before, where I was finding stocks consistently that were showing promising price action, and every single time I would just talk myself out of it for fear of losing out. And it was after the trading day on Friday, the 14th, where I had this idea of a mindset that I really need to approach the market with. And what I think that mindset should be, and it kind of goes along with just being more aware of what I'm actually doing here, what my goal is as a trader in these markets. And that is that when I'm finding all of these plays, a lot of times what will happen is I will miss out on the plays that I had said to myself would be likely to happen. So, and I think a lot of the reason for that is that I'm a beginner who is somewhat new to the markets, and I have the problem that most beginners do have, where they're running around frantically trying to find every single thing that's in play right now, trying to soak up everything, when in reality the best thing to do is to just focus on a select few that you've picked out for yourself and just watch and observe and soak up every ounce, every little piece of those specific stocks that you picked. That is the best way, I think, to learn, but it's easier said than done. So the other way that I would like to help myself approach this is with the mindset that when I'm finding these plays, half the problem that I'm having is that I want something that's moving right now. I want to see it moving so I can experience it moving. But that is not the right mentality to have. The whole reason something is a good, quote, setup is that it is a setup, which means it has not yet moved or made the move that you are looking for. It is just showing as many signs as you can align to put you in a position to be in the stock before or while the move is happening. To be in the stock before that move is happening, not to watch it all the way through and then get FOMO in the end and try to get in on it then. Now, I'm not saying that's what I've done with the FOMO thing, but it's more of that I'll watch these things continue trending upwards and make those moves after I'd found them, but talk myself out of initially entering them when I had first seen them because I was waiting for that move, which all sounds kind of out of order and kind of out of whack. And, looking back on it and reflecting on it, it really is. It's something I need to keep in mind every time is that my goal here is to find these setups that are called setups because they're setting up for that move. And if I remember that and keep that in mind, I think it'll help me tremendously with being comfortable entering these trades and exiting just simply if they don't work out and go against me a little bit. But the risk to reward is best when you see these setups before those moves start, because if you get in too late, you're chasing, and they can easily come all the way back down to where the move started. And you're just trying to limit the risk there. So anyways, with all of that being said, I made 2 trades this past week. One on Monday the 10th. First one here, DSCR. I was trying to play a first green day on this day right here. And actually, this does bring up another point that I wanted to make, that something else that I'm trying to work on is identifying the significance of a gap up or gap down more than just simply looking at it and saying, oh, it gapped up, oh, it gapped down. That's just simply identifying one. But that's the easy part. What you should do next, what I should be doing now, is putting that into my process in consideration, thinking about what the significance of that gap up or gap down means for many things within the trade, like time of day of when this trade could happen or when a good entry could occur, or how much or how little the stock could move based on the gap up or gap down, what direction the stock could move that day. And those are the 3 biggest things that a gap up or gap down can really tell you. It can kind of help you out and work as that guideline for what exactly you want to do with that trade and with that stock. So with that being said, the DSCR reminds me of that, which I didn't actually that's something that I didn't actually think about until a few days after this DSCR trade. But this was actually the first time I tried to use a gap up in my thought process when going to enter a trade. So let me change this actually to a 1-year chart. And let's bring it up right here. So as you can see on the daily chart on the right hand side, things had its huge run up for over a month. Over 2 months now actually. But the reason I was trading it here is because it had these 2 big green days right here and had just had its first red day with it followed by a second red day. Now you can see on this second red day, which on the intraday chart would be right here, it actually had bounced around this area twice, as you can see in the morning. It panicked, had a nice bounce there, and then kind of started bouncing a little bit again towards the close. Now what that's telling me is that this thing has a potential to bounce off of this previous breakout area, which is not all that uncommon. That's actually fairly common to see with a lot of price action. When you study and look at a lot of charts, you can see that this is something that happens a good amount of the time. Now, where the gap up comes into play, comes into my thought process, is that after it had bounced off this area, like I said, it actually gaps up for the first time since having that initial red day. Now, what that tells me is that now this thing's got a little bit of juice. It's got a little bit of strength left. It's bouncing off of this previous breakout area, and it's gapping up, showing that buyers are willing to come in now and push this thing a little bit. So what is my plan? My plan come market open was to buy it basically right out of the gate. I waited a minute because as you can see, this first minute candle right here didn't really do much, because oftentimes I'll wait that first minute just to see what direction this thing really feels like going. But I'll also use the level 2 to kind of help gauge the strength or weakness of that stock. But my plan was to enter basically right out of the gate and just ride a quick morning spike with that typical, I've looked at a lot of first green day intraday charts, and you see that it's usually just that morning spike, then sometimes sideways price action, or eventually it'll fade off throughout the day. Sometimes it'll even, if it's strong enough, will continue to uptrend for the rest of the day, possibly a gap up the next day. I was just looking for the lowest risk possible trade by just going for that quick morning spike on that first green day setup. Now, as you can see, after I entered here around 9:31-ish, this thing was going in my favor for, about a minute or two. But that's not really enough. I'm not looking for a little quick scalp like that. I'm looking for at least a few more minutes of uptrend, at least. Now you can see this thing started turning against me. I saw the turn in the level 2, which didn't give me a good feeling. And that all the buyers had basically been expended and executed at this point, and it only had gone up, this much right here. And that was a sign of weakness right there. So as it started coming down, I still stuck to my plan. I didn't cut it early. I waited for it to get to where I bought it, which was right around here, I think. And, that was just, break-even trade, basically. But I don't really see anything wrong with this one. I had a good sound reason and foundation for trading, or for taking this trade. It just simply didn't go, it just simply went against me. And, there's nothing you can do there. No setup is 100% guaranteed. This isn't just 100% guaranteed money, guaranteed profits. It's just part of the game. And that is a loss that I'm definitely happy with, considering it wasn't me simply putting myself in a bad situation that I shouldn't have been in the first place. I had a sound hypothesis and trade plan, and I executed it. Win or lose, I executed my trade plan, and that's all I need to keep in mind. Alright, so the next trade I made was on KPAY, and before I get into the details behind this trade, I just want to say this for reference for myself in the future, that I did only make these 2 trades this week, and that isn't bad necessarily, but there were other really good trades I could have taken as well that were just missed opportunities from me hesitating and also trying to find something constantly, running around trying to find anything to play, and losing focus on the select few that I had made for myself. And another problem that there is with that I've been having is that I'll just look something off. I'll just write something off much earlier than you really should. So anyway, let's get right into the trade here. So this trade was on this day right here, the 14th. On the daily, you can see it right here. In this one, this one had a huge green day a few days before. I remember I watched it that day. That was, one of these many times where I missed an opportunity that I had seen fairly early on. But that's besides the point here. This thing had consolidated for a couple days after its big run up, holding half or more than half its gains, which is always a good sign of there being something left, some more juice in the tank. You can see it had a little bit of a rebound on this day, but then had a gap down right here under this day that I ended up trading it. Looking back on this trade now, this wasn't the best entry. It was an okay setup, but really not that good. I was just trying to play a breakout on this one. I was trying to play the breakout over these previous highs at around 12.012, that area. And, the execution just wasn't there. I mean, this thing had gapped down here, but immediately had jumped right out the gate. And I remember the green red is right here. And, I bought right at that level, which, wasn't a good idea because that basically was the ceiling at this point. Green red was right above this, and this thing didn't really poke through it significantly at all to come back and make a pullback for confirmation on it, like you can see it did later on in the day. So that was my first mistake right there. But yep, I entered basically right at 0.012, and immediately 2 candles after it had this huge red candle all the way down to this area right about at 1 cent. Now, I remember before I even took this trade, I had made sure I had zoomed out and really looked at the past few days on this chart, intraday, and you can see that this area had supported numerous times. Here, you could say here, um, even here 2 days prior, and this area had a lot of price action in around that area. So this thing had a significant amount of volume traded in this area. So this was a significant area of support at this point. It was already above it. Now, what I ended up doing, like I said, is I bought when it was at the next area, key area of resistance, and then sold it into that support area. Now, something to just keep in mind is if I do want to be more aggressive and buy this, I have two options. I can say, okay, I'm buying this right under green red. So I'm going to set a kind of loose risk and let it bounce off of that support level because I need to make sure I keep that support level in mind when I'm making this trade in the first place. So there's that option, or the second option I have is I can wait to see how this thing reacts to this area a little bit more instead of just simply consolidating under it. Just because it consolidates under that area doesn't mean that this is an area of support. It's still resistance at that point, which is exactly the same thing that if you recall, I made a trade 2 weeks ago or so on SPZI. I think it was in my first weekly recap that I've done on this channel, and I was trying to buy a breakout, and I bought the consolidation right at the breakout level when, very similar to this, it never actually perked through it enough to make it a confirmation, to make it a retest as new support, former resistance as new support of that area, just like here. So, it went down and bounced off that support level, but I sold as soon as it broke where it opened up. I sold, and that loss right there, it kind of stung because I knew that entry was poor almost immediately after selling, and you can see that this thing did perform that breakthrough, that 12 area, and here's the confirmation right here. And it didn't go up a crazy amount from there, but it was still enough to make me to know that I more or less botched this trade. Now, I'm not entirely upset with it because it wasn't necessarily a bad plan and a bad idea. It was just poor execution and a poor entry, and not really considering that area of support from the past few days of this run up that I had even taken the time to look at before even making this trade. Pre-market, I was looking at all of this, and I just completely neglected it when in the moment. I think that'll just come with time and experience, but it's just a simple mistake here. And as you can see later on in the day, came back to that 12 area again, which it once again supported, and then went up to the 17s, to the 1.7s really, but before ultimately failing. However, this breakout was still, it was still technically a decent breakout here, and there was some potential there. But there are a lot of other trades that I watched this whole past week and just failed to execute on any of them, failed to participate. And I think if I just keep working at this, eventually I can get there. It's kind of a struggle. I'm in an awkward area. I'm in an awkward stage of my development, like I said earlier. But hopefully I can figure things out and continue to move forward and keep my right foot in front of the other and continue to move forward. With that, all of that being said, this is my third weekly recap, and I will hopefully be back more promptly at the end of this week with my next recap.